right, welcome everyone. Thank you so much for joining. This is Aparo's Nonprofit Bites and Insights. These are a webinar series that we have tailored specifically for nonprofit professionals. And today we have Stephen Newland with us from Georgia, focusing on the financial blueprint, how growing nonprofits build financial sustainability. Before we started the webinar, Stephen and I had a really great conversation around this, so I'm super excited to learn more from him on this topic. But before I turn it over to him, few housekeeping items. We are recording this session, which will be uploaded to our YouTube channel as well as our blog. But all of you who are attending live will receive a follow-up email from me. It'll include the direct link to the recording, so you don't need to go searching for it, as well as a slide deck and other resources we might talk about today. Q&A and chat box are available to be used, so feel free to use those to drop in your questions, make any comments. Someone has already warmed up the chat around where they're coming from, so feel free to continue to do that. Really quickly, for those of you who are new to Aparo, we are a nonprofit. We are based in Charlotte, North Carolina. And what we do essentially is help other nonprofits with any of their technology and business process needs and challenges. We have 3 different service areas: advice, education, and solutions, which I won't go into right now. But the one I do want to highlight is our tech therapy. So this is normally where new nonprofits come through to talk about their tech challenges, and our tech therapists will help advise on best path moving forward to meet your needs. So if you'd like to learn more, please check out our website, apar.org. And if you haven't already, consider subscribing to our newsletter. The QR code is here to stay updated on our programming. And that is it for me. Gonna go ahead and stop sharing and turn it over to Stephen.
Perfect. I will get my screen up and going here. All right. Everybody see that okay? Perfect.
Looks good.
All right. So here's what we're going to jump into today. I'm really excited to talk about this. I've been doing financial, work either at startups or small businesses or Fortune 500 companies or nonprofits for the better half or the better part of 15 years now. And what I'm sharing today is essentially kind of an accumulation of a lot of that knowledge of what I've seen work really well and what I've seen not go really well and how you can avoid that for your growing organization. So I'm excited to jump in today. I'll give you a quick heads up. What we're going to cover is we're going to cover a lot of information. This will almost feel like kind of like a checklist a little bit, but we'll make sure you have all the slides and all the details from the slide notes after. So if you miss something, don't worry about that. We're going to send all this out. So that's just kind of a heads up of where we'll go today. So here are the things that I'm going to cover. I'm going to talk through the 4 key areas that make up a financially sustainable nonprofit. The second one is how to turn your finances into a mission driving tool. For a lot of people and a lot of organizations, it can just feel like one of those administrative tasks that we just have to check the box. Okay, we filled out our 990. Yeah, the books are good. Like, let's just move on to the more important stuff. But I want to flip that paradigm a little bit today and show you how you can use finance to actually make really, really great decisions for your organization. And the last piece that I'll cover today is which financial reports are going to reveal what's really going on in your organization. So that's where we're headed today. Please use the chat. I'll probably go through the content first. I do like more of an interactive style, but there's a lot of stuff to get through. So I want to make sure I get through the content. And then at the end, I'll try to answer as many questions as I can. So, all right. So we're going to start off with a little story. We're gonna say her name is Brooklyn, and that's just my daughter's name. So that's my little way of inserting my daughter into this mix. But this is a true story. So this is a female executive director, started an organization to serve a cause that she was deeply passionate about, and she was really skilled at it. It started to get some traction, and then all of a sudden she found herself having to do less of the work, like less of the mission driving work and more of the administrative tasks, like reviewing financial reports and that kind of stuff, doing audits. Ultimately, she was operating out of her zone of genius, and it was starting to wear on her. She was starting to lose some of that passion. She had a bad experience with a bookkeeper, and then after that, she realized, okay, I've just got to fix this part of my organization because it's starting to hold me back. So she was always worried about, when if she were to go hire somebody, would she have enough cash in the bank? It was something that always kind of kept her up at night. Like, I don't know, what is my cash going to look like over the next 6 months? Am I going to be able to make it? Can I go make that strategic hire that I need to make? Ultimately, she didn't have a forecast in place. She was checking the bank account a lot and doing some rough math, kind of back of the napkin math. Like, I think I can do it. She didn't really trust her books at all. The accounting was kind of messed up, and the bookkeeping just really wasn't clean. And so you can see, kind of the conundrum that she's dealing with. Ultimately, what this did was it led her to make short-term decisions, and these were decisions that ultimately had a negative impact on the organization itself. So what that led to was just it caused a ton of stress. She was operating out of her zone of genius. She was, just trying to make decisions, and she just didn't feel like she had all the data. And so anyway, you can see how this was really frustrating to her, and it started to wear on the passion that she originally had when she got into this work. So I'm curious. You may not have related to every piece of that story, but if you can relate to any piece of that story, I'd love to, say like put a quick note in the chat if you can relate to any of that. If you're leading or working at a growing organization, the reality is over time, like things just get stretched thin, especially when it comes to finance. There's all kinds of stuff to do on the compliance side, like 990s and tax receipts. You have grant reporting, you have audits, you have payroll. I could keep going on and on and on, right? These are the fun things, right? No, they're they're not to a lot of people. Um, and the reality is, with all these things, the stress grows, and it's not as fun as it was maybe in the early days when it was more focused on that mission and there's less of this administrative stuff to deal with. Um, so I will kind of pause there. I think there were some comments in the chat. I haven't had a chance to read them yet, but I don't know if we have anybody that kind of said, yes, that sounds like me a little bit. Do we have a few of those in team?
Yes, we do. And I think we
Okay.
also got a thumbs up as well. Feel free to
Okay.
use the
Good.
react button, you guys.
Yes, there you go. So here's what I'll say before I jump in. You know, with finances, for a lot of people who are in the nonprofit space, and really it doesn't matter, nonprofit, startup, any business, it can just feel like over time you kind of get out ahead of where your kind of working knowledge is on this topic. And what I would say is give yourself grace, because it's impossible to be an expert fundraiser, an expert, a leader of teams, an expert finance person. It's impossible to be an expert in all these areas. So give yourself grace. This is all very, very normal if you're feeling any of this stuff at a growing nonprofit. This is completely normal. And I've worked with over 50 organizations and sat across from, executive directors and leaders. And I would say the vast majority have felt this at some point in their journey in growing their organization. So um, here and I'm getting to the good part. This all sounds like, oh gosh, yeah, this sounds like so depressing so far. But the reality is this. So when financial processes are clear and predictable, you can focus on impact versus how to make it through this next year. And what I'm going to share with you today is going to be the blueprint or the framework to do that. Um, so it's my you know the quick little way of branding this framework. I just call it the financial blueprint. And there's four really key areas to do this. I would say starting, so the first one to start with is this financial operations right here. This is the base. So if this is not tightened up and not, really focused on the rest of these compliance, planning, and reporting, they're going to struggle. So if I were to say, if you're looking at a pyramid, this is the base of the pyramid. It's that, this financial operations is so critical. So I'm going to spend a little bit more time on that area than the others, just because it is so critical, but it's often overlooked by a lot of organizations I've worked with. So let's talk about what this looks like. What is financial operations? Like, what does that mean? essentially, when your organization goes out and helps somebody, so let's say you're a food pantry, you provide food for the community. Well, that activity, maybe you've got payroll, you're going to maybe purchase some food, you've got rent or insurance, all of that activity, it's going to create financial information and financial data. That is where financial operations comes in. So all financial operations covers is how well that data and how well that information is organized. If that is organized well, it makes filing the 990, which is in the compliance bucket, it makes that go way smoother. And then once, if you've got really good financial data, it makes doing a forecast way easier. It makes planning for the future way easier. It also makes reporting way cleaner and way easier to understand and present to your board. Hey, here's what's going on in our financials. And so you can kind of see why that financial operations piece is really, really critical. Um, and the beauty of this, the reason it's a circle is because the data, the activity of your organization starts here, but it can flow to all these other areas. The beauty of these, though, especially in reporting and planning, these can be kind of circled right back and filtered right back into your financial operations to make better decisions. And it kind of can go in this loop over time. So I will get started getting into some of the nuts and bolts here. Um, so the first thing that we're going to cover here, this is going to be financial operations. And if you're ever curious where we're at, just look in this bottom left-hand corner. You'll see which slice of the pie we're on. So the first question that I always ask is, do you know, is your organization using, a cash or accrual basis for accounting? So some organizations, if you're just starting off, most organizations are using cash basis. Eventually, a lot of organizations will have to move or will want to move to accrual basis because a lot of times bigger grants will start asking for your reviews and audits to be done on an accrual basis. So it's just important to know that. It also affects how your bookkeeping is ultimately handled. So that's just something to understand. The next one is your chart of accounts. I can't tell you, this is one, I would say this and having a forecast in place are two of the most important things to getting insights out of your financial information. I have seen a lot of really messy chart of accounts, and what it does is it makes this if you pull up your financial reports every month or if you print it out and it just starts, it's like an eye chart and it's overwhelming, the likelihood that you're going to get any insights out of that is very, very low. In fact, most people are just going to say, oh, wow, yep, I looked at the financial reports this month. Check. I'm just going to ignore them and set them aside. And so I have found spending time to really clean up your chart of accounts makes a world of a difference. The whole point of the chart of accounts is just to have a very digestible financial statement where you can look at it. It fits on one piece of paper. Within 30 seconds to a minute, you can read through your financial statements and say, yeah, I have a really good idea of what's going on in my organization. Um, I don't have an example offhand. I have it on another spreadsheet, but I'm not going to pull it up today. But if you want to see a kind of a picture or a copy of what I think a clean chart of accounts looks like, send me a message on LinkedIn, and I'll have my contact info at the end here, or you can send me an email. I'd love to share it with you because I think it's such a game changer for a lot of organizations. Um, the next one is, are you tracking your program admin and fundraising costs separately? I'd imagine most people are doing this. So a couple things that I'll mention on this. First thing is, are they documented somewhere? So do you document, or does it just live in your bookkeeper's head? Or is it documented somewhere on a spreadsheet or somewhere on a Word doc? Where you can reference this back. That's something that I always, always, always recommend. And the other thing that I always say, especially in this area, now if you is be realistic. So a lot of times, I work with a lot of organizations and I'll see, hey, they just magically got to that 80% program number. And then you start digging in, you're like, well, some of these assumptions are a little, convenient. And so the reason, and I know a lot of that is tied to fundraising, right? Donors and a lot of grants, you want to see, hey, they're being efficient with the dollars that they're using. Um, what I would say to this is really dig into those allocations because if if you're kind of if your organization is kind of fudging things or making things look a little better than they do, making it look like program expenses are a little bit better than they are versus like fundraising and admin. I know those are the two that's like we want to keep fundraising and admin as low as possible and program as high as possible. Really dig into that because that information is really good for you to know to manage your organization well. Because if you really are spending a lot more on admin and fundraising, you should know that instead of it being kind of hidden in the numbers. It will help you maybe identify some inefficiencies or some areas that you're like, hey, why are we still spending this money on this fundraising, initiative when it's really not returned what it should have been. So that's kind of my soapbox on that one is really dig into your allocations because it without it, that those allocations can really just not really tell you a whole lot about your organization. The next one is, do you have proper documentation attached to each transaction? So this is really critical. If anybody, I'm not sure if anybody in the call has been through a review or an audit. If you have, you know that you get lots of requests from the auditors and the reviewers of, hey, can you provide this documentation for the grant you received on July 28th, 2024? And I need to see it from the minute you got the letter in the mail and who opened the mail. I need to see it all the way down to how did it get to the bank account, right? And how it got reconciled. So documentation is so important. So just really focus on do you have proper documentation attached to each transaction? And then banking, are you with a reputable bank? And do you have greater than $250,000 in assets with any one bank? A I would say a misconception is that you absolutely cannot have more than $250,000 in any one bank. The reality is you can, and it will get be a note on an audit or review, but it really is an organizational decision. So if you feel comfortable doing that, it is something that you can do. Generally, it's advised not to because that's how much the FDIC insurance has. Meaning, if there was like some catastrophic bank issue, you'd have all that money returned to you. So I'm going to keep moving along here. The next one, and we're still in financial operations here, checks and balances. So these think of these as ways to kind of validate how healthy your financial operations are. So these are really easy things that you can do to go, and you can even do this like this week, where you can say, okay, how healthy are my books? Do I have really clean financial data or do I have work to do? So the first thing that I would do here is you can pull. I would assume most people are using QuickBooks. Maybe some people are using Zero or a few other tools, but pull what's called a general ledger report. And essentially, a general ledger report is just all activity from your financial CRM. So it pulls all this activity, and then what you can do is look at do the transactions have a donor or a vendor tied to them? And if not, that's a sign that maybe the books aren't as clean as they should be. The second question I always ask is anything uncategorized? So do you have like on your chart of accounts, do you have something that's just like an uncategorized bucket where stuff just kind of finds its way into and it just kind of sits in there for a while? And then another thing I love to do is run your financial statements, your profit and loss statement, and your balance sheet. Run that every single month after the bookkeeper is done. And this could be your treasurer, this could be somebody else on staff. I just want to give these tools to help do some checks in the books. But if you run these reports every month, run it where you can see the last 3 months, like where it's like month one, month two, month three in a column, and just look line by line and see if you see any big fluctuations. Usually, if there is a big fluctuation, it's a sign, hey, maybe we missed something, or maybe something got miscategorized, or hey, whoops, we forgot to record a payroll. And that's happened before. Believe it or not, we've caught where payroll forgot to get run. Um, so those are a couple other things. Reconciliations. I'm gonna I'm gonna try to speed up here a little bit. Reconciliations. Are you reconciling your financial records to your donor CRM? This is really, really important, and it's something that a lot of organizations do overlook. But arguably, these are your two of your most important systems. So it's your development, where you're keeping all your donor data, and then your financial data. You should be able to pretty easily reconcile these. If not, that means maybe there's some information that, hey, maybe you got a grant in QuickBooks or in your bank account, and it just, for whatever reason, because it was a busy time of year, maybe it was during your gala, it just missed your donor CRM. Well, when you go to run that report of, who are my biggest donors? Who should we invite to the gala next year? Well, maybe that grant got left off, right? And so doing this reconciliation really makes sure that your data is really accurate in both places. The other thing I would say is, this is very common practice. So if you've got a bookkeeper, or if you're on the finance team at a nonprofit, you're already all over this one. But this is just, are you reconciling your financial system like QuickBooks to all your cash accounts and credit card statements? So, are you reconciling your QuickBooks balance to your bank account statement, your credit card balance in QuickBooks to your credit card statement? Um, there are a few other reconciliations. The biggest one that I would say is another really, really important one is having some sort of a payroll allocate or a payroll reconciliation in place. And this is taking the payroll reports from if you're using ADP or Gusto or whoever, and reconciling those to what is actually in QuickBooks, what is actually on your books, because this is by far the biggest area where fraud occurs. And so if you have somebody looking every single, month, or every single time payroll is done, and reconciling to make sure, hey, these were the reports straight from Gusto, straight from ADP, and here's exactly what made it into our financial system. That's just going to be a really good check and balance to have in place. All right. Next one is internal controls. So this one is going to be more challenging for a smaller team, but not impossible. And this is, do you have one person who's recording the transactions and another who is reconciling transactions? So at a lot of small teams, you might have one person who's recording the transaction, and that same person, maybe a bookkeeper, is also doing the reconciliations. Which, again, that's totally fine if that's the case if you're a small team. A workaround around that is, as long as you have your treasurer or maybe somebody else on staff who's reviewing the reconciliations after they're done every month, then that's another good check and balance you have um, on that. Let's see. The next ones here, restricted funds and in kind. Um, just as a general rule of thumb, should be making sure that you're tracking restricted funds, separately, or at least keeping a running list of how much of that money in the bank account is truly restricted, and how much is unrestricted. One of the things that can happen over time is if you do spend funds that are very restricted for something that, was not able to, or was not like specified that it could be spent on, it's a great way to lose donor trust. And so this is just a really, really good way to make sure you're managing those restricted funds and the honors and wishes of your donors appropriately. And then if you have in kind, I know a lot of organizations do. Some organizations don't have a lot of in kind, but if you are receiving in kind donations, just make sure you have some way to track those goods and track the fair market value of those goods. I'm gonna take a quick breather because I know this is a lot of information I'm throwing at you. So, is there any questions or any thoughts so far that you have that of the things that I've gone through? Not sure if there's any in the chat here.
See, we've got a hand raise.
Okay.
So I'm gonna look to unmute.
Hey,
Okay.
Tam. Are you guys able to hear me?
Yeah.
Yes.
Great, great, great. Listen, I want to just tell you thank you. Coming from a nonprofit, I don't know if you just want to hear that, but I do have a quick question. Will this be sent to us after we are finished with this? And I do love how you did the unrestricted funds versus the restricted funds. I think for us as a nonprofit, we're trying to figure out which is the best, and this may not be a part of our presentation, but what's
Mhm.
the best? We use right now QuickBooks. which is kind of normal because we're a new organization, but we're also looking for like grant management. Will we get into this today, like grant management control, or no?
We won't get too deep into grant
Okay.
management, but yeah, if you want to send me a LinkedIn message or an email, I can
Okay.
definitely point you to some resources on that. Um,
Absolutely.
yeah. All right. Any others before I jump back in? And yes, sorry, I meant to. We will be sending everything out, and it's going to have very detailed notes in it. So yeah, so don't worry about. I said it that this way intentionally. You're not going to catch everything and write everything down. So we will get a very detailed set of notes after. All right. Well, I'm going to keep it moving here. We talked a little bit about internal controls before, so I'm going to kind of talk about it in a little bit of a different fashion here. So, whenever money comes in or money comes out of your organization, it's really important to kind of what I was saying earlier, essentially have a paper trail for the minute it was intended to be given to your organization to the minute it hits the bank account, right? And so if you can prove that, especially for audits, that's what they're looking for. They just want to make sure like that you're adequately accounting for the money at every single step of the process. Because again, they're just looking for ways where fraud could come into the mix. And this is often overlooked, but I will underscore this, and it makes me really sad. But nonprofits are often targeted for fraud more often than other organizations, and I'm not exactly sure why. But these internal controls really are kind of your way of playing defense against that. We always want to assume the best of everyone working at our organizations, but this is just a great way to play defense and make sure that you're managing donor funds really well. So, great way to think about this is let's think about if you've got a check coming. Well, let's use cash. I know probably not a lot of organizations are using cash, but it's the easiest one to use it as an example. Someone hands you cash at an event. Someone like let's say it's a golf tournament. Ideally, there should be some sort of a tracker there where the minute that money is handed, someone's writing down the name of the donor, how much money they received, and it goes into some sort of an envelope, right? Then maybe you get after the golf tournament, you give it to your finance person or you give it to your executive director or whoever, you give it to whoever's going to go to the bank. They take it to the bank. Whatever hits the bank for that should match what was on that tracker, right? And so you can just right there, you can say, hey, that from the minute it was received till it hit the bank, we know the same amount, was received or hit the bank. And so that's just one quick example. And the same thing is true for money leaving the organization. So ideally, you have someone who initiates a purchase and then someone who approves it. I know this can be annoying and a little tedious when it comes to some of the smaller purchases. And there's tools out there that can help make that a lot easier. But again, this is just about protecting the organization and the organization's funds. So when you're thinking about money coming in, it's can I track the money from the minute it was intended to be given to me to the time it hits the bank account? Talking about money going out, is there somebody who initiates the transaction and then ultimately someone who approves it before it goes out? All right. If you didn't think financial operations was fun, we're getting into tax and compliance now. So we're getting real fun now. We'll get my favorite stuff is the planning and reporting. So we'll get there. I promise it'll get a little bit better. But this is really, really important stuff. So that's why I wanted to spend some time on it. Couple quick questions here. So are your donor receipts in line with IRS standards? So you can kind of see the IRS standards right on the website. And I've got a link in the presentation too for that. Um, Again, that's usually pretty easy to fix, and it's pretty common. If you're using, any sort of nonprofit CRM, a lot of times they're already kind of configured to have a lot of that information in it. Do you have anything that requires sales tax to be collected or paid? The most common time I see this come into play is usually around things like gala, silent auctions, or even tickets sold. Right. And so typically around those types of things, usually not around contributions like grants or individual donations. Form 990s. Everyone should be filing the Form 990 every single year. May 15 is the deadline. You can always extend it to November 15, which is very, very popular to do because it's just it gives you an extra 6 months to get that done. The only the only time where I've seen that organizations really want to prioritize getting it done earlier in the year is so that they have more up-to-date information they can include on grant applications earlier in the year. It just kind of makes you look like, hey, they've got their stuff together. They've got their 990 filed already. If you're applying for grants, kind of mid-year. The next one is, do you have an updated W-9 form? So this is the form that you send to vendors, right? And if you're so just make sure that was updated in the last 2 years. So just make sure you're using the most up-to-date version of that. And then are you sending 1099s to applicable vendors by January 31st every year? If you have a bookkeeping team doing this, they should be doing all these things should already be on their radar. But again, this is just another checklist that, if you're the leader of your organization, you can take this and either send to your bookkeeping team or you can kind of act as a second set of eyes, like, are these things being done for your organization? All right, compliance and risk. So, are you filing with your Secretary of State annually? So, I'm here in Georgia. We have to file with the Georgia Secretary of State. It's like $50 a year. It just says, hey, you're a registered corporation in the state. It's a very, very easy thing to do. And then second, do you renew with your local jurisdiction? So, for a business license. So a lot of times you also have to apply if you're in a local city, or county, they will require a business license to operate. Again, these are all very, very local laws and state specific. So I would just research this in your own state. The other one is, have you maintained your charitable solicitation license? In states where you're actively looking for donations. So a lot of states have pretty good sized thresholds. So there are a few that have pretty low thresholds, but let's say you're operating in Georgia and you've got a donation in Texas, but it's only for like $50. Well, you don't have to just go apply for a charitable solicitation license in Texas. I don't know what their threshold is. Well, let's just for fun, let's say it's 50,000 or $100,000, where they're not even worried about you applying unless you've received that much in funds from their state. So you just want to make sure you're up to date on that. If you're not sure where to start, just look at what your state says and just maybe do a quick check to see if you've got any really, really large donations out of state. The next one, and this is a link in here that you'll get when you get the presentation, but are you following your state guidelines for financial reviews and audits? So, working with an organization in California, they don't have to do, I don't believe they have to do any review, but they have to do an audit when they hit $2 million in revenue. Well, in Georgia, it's very different. Once you hit $500,000 of annual revenue, you have to do what's called a financial review, which is almost like it's like a dress rehearsal for an audit. If that's maybe the best way to put it. It's a very light version of an audit. And then also in Georgia, once you hit $1 million in revenue, you have to then do a full financial audit. So these can vary quite a bit state to state. So just make sure you understand that in your own state. And then one that's often overlooked is, do you review your insurance coverage at least annually? So I'm a big fan of this, especially with the way kind of things change so fast. Maybe your organization added another event this year. Maybe you were doing a gala and you said, hey, let's do a golf event. We just want to make sure that any new activity that your organization is doing, you just want to make sure that it fits in your current insurance policy versus just kind of hitting the renew button and then like, oh, we should be fine. Insurance is one of those things that no one really likes it. No one really likes paying for it, but you're really glad you took the time to review it and make sure you have the right coverage if and when you ever need it. And so again, that's just an easy thing to do. This is actually a great could be a great thing for your board. If you've got somebody on the board who's either in the insurance industry or more familiar with that industry, that could be something great to kind of delegate and have them own, or even your finance committee if you have a finance committee. I've seen a little bit in the chat. I haven't pulled it up. I'm not sure if there's anything we want to call out here before I move on to the next one?
Nope, you're good. I've just
Okay.
been dropping the links that you have in your deck into the chat.
Oh, you're awesome. Thank you for doing that.
No problem.
Okay. So we get into some of the more of the fun stuff. So this is planning. Um, Another way to think about this is forecasting, planning for the future. First question is, do you have a strategic plan? So this is usually your 3 to 5 year plan. Um, I know a lot of organizations will spend hours, if not days, going through the strategic plan and talking with the board, maybe even bringing like an outside resource in to craft this plan, and then it'll kind of generally be used to guide the organization, but at times it'll just kind of get left on the shelf a little bit. What I always love to suggest is use your strategic plan as the starting point for your budget. So your budget, if your strategic plan is 3 to 5 years, your budget should say, okay, what do we, based on the strategic plan, what do we need to do from year 1 to 2 to hit this strategic plan in year 5? That should really be what your budget is based off of. The best part about this is if you've done this long exercise and this really helpful exercise of building a strategic plan, you've now got something you don't have to like sit at a kind of a blank spreadsheet and figure out what is my budget going to be for next year. You've got already a starting point and you just have to fill in the numbers to make sure, okay, if we want to hit our strategic plan in a year, we need to be at XYZ point. We need to have XYZ revenue raised. We need to have, a new development director. We need to have, whatever that looks like. Um, the next one, I would imagine most organizations are doing this, but do you complete an annual budget and is it approved by your board? So I think the second part is one that can be overlooked is getting board approval. This is just ultimately something that they will have buy-in. So if you at least give them voice into the process, they're going to be a little bit more bought into the overall strategy for the organization. Um, the third bullet point, does your budget include a cash projection and or a balance sheet? I would say for a lot of our organizations, especially I would say if you're under like 1 million or so, maybe 1.5 million, it's pretty easy just to add like an extra, like a cash projection line to the bottom of your budget. Anything past that, I would really recommend even budgeting out your balance sheet every single year, because this is another really, really critical point, right? If you're taking the time to do this full blown budget, but you're not really measuring, okay, here's what we thought we would be with cash in our budget, then the rest of it doesn't really matter, because cash is so important to your organization. As long as you have cash, you can keep your doors and the lights on, right? You can keep your doors open and the lights on. And so I really recommend this one for any budget is just having some sort of a cash element to it. And the last thing on planning is, do you have a cash flow forecast that you update regularly? And regularly could mean once a month, could mean once a quarter. It's just something that are you looking towards the future? Do you have some sort of tool where you're looking for the future? Here's why. I remember at the very beginning, I referenced a clean chart of accounts and a forecast as probably two of the most important things that I'll talk about today. I'll kind of camp here for a little bit just because I love forecasting. I think it's so important. Um, I have never seen another tool where I'll sit across from an executive director or leader and I'll say, okay, I have your first version of the forecast. And I've never seen another tool or analysis that I've done that kind of, I've seen their actual like stress in their shoulders kind of like drop, like, okay, feel like I've got like a little bit more of a sense of control over things because you've now got 6 months into the future or a year into the future, visibility into, okay, if I get that grant that I'm going after, yeah, we'll be okay to go hire that development director versus just kind of guessing and hoping that you have enough in the bank account. Um, what I've seen this tool do is it really unlocks the creativity and strategy of the executive director and the leadership team. It allows you to kind of dream a little bit. The forecast, all it is just putting the dreams and vision for the organization onto a spreadsheet and saying, what do the numbers say? That's essentially all it is. So anyway, I could keep talking about that, but I'm a huge believer in a cash flow forecast. It doesn't it doesn't have to be some crazy spreadsheet fancy thing. It can be. I enjoy doing like really fun spreadsheets and things like that, but it doesn't have to be something that it's like, takes months and weeks to put together. This can be something that's very, very simple for your organization just to get something going. All right, so let's move into reporting. So, what are the different types of reporting that we should be looking at? Each month, here's what when I work with people, what I include for the leadership team and the board. Every single month, I give them the P&L and the balance sheet, and I show them the last 3 months, like I was talking about earlier. And I know we call them the statement of activity and the statement of financial position, but a lot of people are familiar with the P&L and balance sheet, so I like to use that terminology. Um, what I also provide is year-to-date budget versus year-to-date actuals. And so if it's July 31st, let's just pretend it's mid-August. If you had year-to-date, through July, if you had here are my January through July actuals versus my January through July budget, and you had, you can see, okay, where am I off? Oh, I'm lower on salaries because I hired somebody later than I thought I would, or, that one grant that I budgeted just hasn't come through yet. I should follow up with them. What it does is it creates these reminders almost of like, yeah, we had planned on that. Why isn't that where it should be by now? And it just creates this monthly check in essentially with your organization to say, where are those things that we had planned on and either we haven't got to them, or maybe they didn't perform as well as we should have, or it just gives you this monthly check. Yes, so those are some of the key reports I like to cover. The other one I would say is helpful. Some people I would say, I would say it's optional, but it's really, really helpful. And that one's the actual plus forecast versus budget. Um, let's use the example I was just talking about. Let's say it's mid-August. So on this report, what you would show is you would show January through July actuals. And then remember that forecast we talked about, you would show August through December forecast. So you have 12 months of data. You have actuals through July, forecast through the end of the year, and you compare that to your full year budget. So it's essentially you saying, "Hey, here's what we think we're on track for versus our budget." And then what that does is, especially at this point of the year, you've got 5 months and you can say, "Wow, we are tracking really low versus grants or versus like, individual donors. Like, what can we do? We've got 5 months to go. What can we do to close that gap?" It gives you this point to see, just to go back to that budget that you had planned and say, where do we need to really focus attention? Where do we need to prioritize a time for the organization in the next 5 months? And again, the reason that's important is because remember that budget is anchored into your strategic plan. And so that's, you see, when you've got the reporting in place, it's all anchored back into that original strategic plan. So that's how these reports can really help your organization. The other thing I recommend is setting a recurring meeting on the calendar. So whoever's responsible for putting these reports together, maybe that's your finance committee, maybe that's your treasurer, maybe that's someone on staff. Put a recurring meeting on the calendar, and every single month, once a month, have a group of people, whether that's the leadership team or whoever, everyone review these reports together. Because without that recurring meeting, this will absolutely be something that slips and slips and slips because it doesn't feel like an urgent thing, but it can be one of the most productive hours of the entire month if you can look at these reports and say, hey, we need to really go focus on grants because we're lower than we thought we were. So I think that's critical. Um, and then the other thing is be financially curious. So maybe you're the executive director and you're not preparing these reports, but someone's presenting them to you. Don't just say, yeah, this looks good, but force yourself to ask 3 questions for every financial report you look at. It could be mundane, it could be simple, but force yourself to ask 3 questions for every single report. What you'll find over time is you will start to uncover little kind of layers of the onion to your organization that you might not have uncovered otherwise. And so I think that's one of the most important parts here is just being financially curious. All right. And this is a couple more slides and we'll wrap up and go to Q&A. Um, there's a lot on this slide, so I'm going to cover this high level, but think of these are the reports that if you can run these types of analysis and reports because you have really clean financial data, you can tell a ton about your organization. And this is ultimately why that clean financial data is important, because if you can run your organization with these types of analysis and reports, it will give you a leg up on the next organization who's also trying to run their organization efficiently and trying to go after the same donor dollar. So asking your team, what reports would make your job easier to run? So, for example, if you have departments and they have responsibility over a budget, do they get reports every month of their slice of the budget? Like, do they get reports on here's how much was actually spent and here's versus like what your total budget was? If not, giving that to them can make them feel some more ownership. Expenses by vendor. This report helped me find over $30,000 of wasted spending at one organization. Um, this was a report where it just has the vendor down across the rows, and it has the months across the top, and you can see over time how much money are we spending per vendor. We found a lot of vendors that nobody even realized we were still paying. They were still on a corporate card. People had left the organization, and the next person who took the leadership spot over just didn't. It was just, yeah, they just kind of installed their own software and their own processes, and but like kept the old stuff going, and no one thought to ask, hey, do we still need this, until we ran this report. And it was a $30,000 a year just it going towards software that very few people, if nobody, was even using. And so this is a really, really, really good report if you want to stay on top of your finances. I know I'm like, man, I need this for like my personal. I'm like, okay, how long have I been paying for that subscription that I haven't used in forever? Um, so the other piece of analysis, I just keep going down the list here, is always know at any given time how many months of cash do you have on hand. So going back to that monthly meeting, part of that monthly meeting should be reviewing how many months of cash do we have on hand. What if we got no more revenue for the rest of the year? Could we make it? How many months could we make it? And this is as simply as what's my cash balance divided by what I like to use is the average last 3 months of expenses. And if you do that, it gives you a good idea of how many months of cash you have left. A lot of people, kind of a healthy range to me in the nonprofit world is anywhere between 6 to 12 months of cash on hand at any given time. If you think about COVID, right? I'm trying to use an example of like what's the most recent kind of big shock to the system. Um, if you had 6 months to pivot, that's enough to figure something out, right? But if you had less than that, it would be tricky. If you had 3 months or even 1 month of cash, right, and say COVID hit and got like, let's hope that never happens again, right? But we're just trying to plan for the worst case scenario here. It gives you all that cash does is it just gives you time to pivot. Um, Revenue per employee, I'm going to skip that. It's going to be in the notes. This is just a really I'll give ranges for what this should be. It just gives you an idea of whether you're overstaffed or understaffed for your size. The true cost of fundraising, this is also one where you can look at, okay, how much did that event cost us last year versus how much did we raise from it? What about this year? Are we getting better or worse in that area? And you can also compare that to different types of fundraising. So you can say, we spent, I don't know, 150 staff hours on our gala and we spent, $20,000 on catering. But at the same time, we spent 300 hours on grant writing. And here's how much we got from each one, like which one was more worth it. So, or which one was more efficient in raising money. So that's one piece of analysis you can do that's really insightful into showing like where you should put more money into raising money for your organization. All right, donor concentration. What percentage of your revenue are from your top 5 donors? This one, we were talking a little bit actually before we hit record. I met with an organization who had nearly 80% of their revenue is tied to one vendor or one donor. That donor decided all of a sudden they were going to change from a grant model where they gave the organization money up front to a reimbursement model where they had to request reimbursement 30 to 60 days after this organization had spent money. You can imagine what that did. They all of a sudden were like, well, we were used to getting the money up front, and now we have to front the money for, up to 2 months. That's going to change a whole lot. We don't have that much money on hand. And so when you have my rule of thumb is, and this will differ between certain people, but if you have 40% or more of your revenue tied to your top five donors, I would say you're kind of starting to enter that risky territory where if one of them pulled away, you're going to have to make some serious changes to your organization, right? Whereas if you're closer to that 10 or even 20% range, you can, a lot of organizations could kind of absorb that. And then the last one is how much does it cost to provide one unit of service to your clients? Um, this one I love, love, love to use on grant applications, and I love to use this with big donor, with high net worth donors, because this is how a lot of them think about in terms of business. They're thinking about it's called unit economics in the business world. How much is it going to cost me to deliver one more cup of Starbucks to each, to that next person that comes in? How much is it going to cost to, whatever, pick anything. And so whatever that is for your organization, if you just get into that habit of tracking, how much does it cost to provide one, maybe it's bag of groceries if you're a food bank, or if you're supporting foster families, how much does it cost to support one foster family? And if you can track that over time and show that to donors, it is a great piece of analysis, and it helps you as an organization see if you're getting more or less efficient as you're managing the organization over time. So, as I talked about, we covered probably too much today. We've covered a lot of detail, but I wanted to make sure I gave it all to you, so that you could kind of pinpoint maybe which area you feel like your organization needs to kind of focus on. So I would say think about that. Don't feel like you got to tackle all this at once. It is impossible. I promise. A lot of organizations, this will take months, if not a year, to build out. In some organizations, you might even be at the point where you're just like, hey, I'm just trying to get board reporting in place. All this sounds great. Just think about which of these for your organization is going to have the most impact. And if you're not sure what that is, I would default to financial operations, because as we talked about earlier, that is going to affect every single other area of that circle. And it is way easier to start with financial operations sooner than later than it is down the road to have to go back and clean up something that's kind of messy. So that would be my suggestion. But take a minute and really just kind of think through, or after this call, kind of think through which of these areas would be most impactful for your organization to focus on. And I'll wrap up with these last couple slides here. Imagine having visibility into your cash flow 12 months into the future. Imagine walking into a board meeting confident in your numbers. Imagine making strategic hires because you know you can afford them. And imagine a financially sustainable organization built to drive its mission forward long into the future. That is exactly what this financial blueprint it's designed to do. And it will help you do that. I've seen organizations who have implemented these and they have way less stress when it comes to the financial side of things. They're able to pass audits very cleanly, and it just helps their organization run smoother. So last thing is financial clarity results in less stress and better decisions. And ultimately, what every single person on this call got into nonprofit work to do, it leads to driving more impact for your organization. And I think we can open it up to Q&A, if there's anything in there. And then I'll just do a quick thing here. I post quite a bit on LinkedIn. So if you want kind of more bite-sized nonprofit finance tips, feel free to add me on there. That's where the QR code leads. I've also got a link I put together a list of 150 nonprofit discounts. So there's a link on my profile. If you click on that, and you'll be able to search and scan that list to see if any of those vendors are ones that you can get a discount on that you're already using. And I think with that, we can open it up to Q&A if there's any questions.
If you guys do have any questions, you can drop it in the chat, or we can do if you want to raise your hand, if it's easier to ask your question verbally, we can do that as well. All right. I think we're good. You covered so much information, Stephen. I
Yeah.
thought that was amazing. And I just wanted to reiterate your point of take it piece by piece.
Yes.
Take the points that resonate the most with you and get started with that. And if you do have any additional questions, don't hesitate to either reach out to Stephen or you can reach out to us at Aparo. We can definitely help support you on your questions as well as pointing you in the right direction, that sort of thing. Before you leave, please make sure you're clicking that post-webinar survey link in the chat. Would love your feedback as well as any other topics you'd like us to have. We do take a look at those suggestions and recommendations and try and make them happen for you. So please make sure you complete those. And that is it for today. So again, Stephen, thank you so much. Everyone else, thanks so much for joining. Hope you guys have a good rest of your day and your week. Thank you all.
Thanks, everybody.